Good morning, YouTube. Today I wanted to introduce you to what exact broad market investments you could make with a dollar cost average to get started investing and when you should start. Because I hear a lot of questions about, I want to start, but I don't know where to start. There's all these things you could do. What should I do first and for how long? How do I make money? When do I sell? When do I buy? Those type of questions. So I wanted to cover those today with you real quick, just to make it real simple. The hardest thing about adopting this advice is going to be that it is simple. It's not difficult. There's nothing complex about it. And you're going to say, oh, well, I want to do something more, something harder. But this is what you start doing. This is what I still do to different investments. This is how I pursue it. This is how you build your base. The reason you have to do this is because if you buy a rental house, the way it works is you put all your money in a rental house and you buy it, and basically for 5 years you get nothing out. You think you get something out, maybe you get a couple $100 a month, but then the expense comes up and consumes that. And so if all of your money goes into that one thing, you might feel really good the day you bought it, but every month after that or once a year when the expenses come up, you're going to feel bad about it unless you have your base already built. And what you're looking at is how the base is affecting your net worth, your stability, and how you do things. So I want to share that with you real quick today. One, investment. Now there are three I'm going to show you. These are broad market investments. You're not trying to time the market. You're not trying to invest in a certain sector of the market based on your wisdom. You're just trying to be in the market and put money in the market to make it work for you. You're not going to look at the value of the investment. You're not going to look at the timing of the investment. All you have to do is start. It's that simple. And so the first one is Vanguard Index 500. This owns 500 companies in an index, and you buy a piece of that company when you buy it, and so you're going to move up and down with the market. The second one is the Vanguard Total Market. This doesn't own 500. This owns every stock in the market, and so you're going to move up and down. If you look at the 5 years with this one and you look at 5 years with this one, very similar patterns because they're following the market. Now, you might say, well, we're down low now. We should wait until it starts to go up. Well, that doesn't work. And so you have to basically take the timing out of your decision because most people sell low and buy high. So if you look here in the market, there was more people buying here than there were here. Most people, consumers, sell here and buy here because they feel good, and that feeling makes them buy, and the feeling of bad makes them sell. And so you have to take that out of the equation. The last one, I think I can pull it up right now, and this is the one I use. This is an index of stocks that consistently have raised dividends for a long period of time, and some of the top holdings are United Healthcare and Microsoft, for example, and Johnson & Johnson, so consumer staples. And then, you see here it goes down, and just like the other ones, it goes down with the market, and it goes up with the market. And that's what I look for. Look for max here. If you went back to 2008 and you started buying here in 2007, you're going to get the down, down, down for, a couple years, but then you're going to get the up, and you're going to stay in it. See, if you end up selling here, trying to get back in here, then you're not going to hit each one of these places, and that's going to give you a bad pattern of when to buy and sell. This dip right here, you're going to be like, oh, I got to get out because it's going lower, and then you miss this whole upturn. So you don't want to time the market. So VIG, VOO, and then Vanguard Total, VT Sachs are the things I use. They also have low costs, meaning within the fund there's a slight charge but you won't see it. So 0.04% is the cost. So it's very, very low cost, and you're just trying to ride with the index. Apply one of those three funds for you to get started. Dollar cost average the same amount every paycheck, every month, or every 2 weeks into it, and don't watch it. Just let it go and let that be your first investment vehicle that's working for you, and feel good about the fact that you've taken a wise decision. When it goes down, don't sell because you're not timing it. When it goes up, Don't sell, don't buy more. Just don't worry about this vehicle. You can worry about being more sophisticated later, but this is a vehicle that most people that have wealth use consistently over time. Though dollar cost average for 10, 20 years into different things, this is basically the starting place to be at. So you can see what it feels like to own stocks. You can see what it feels like to be high and be low. You'll see how it feels good when they're high, it feels bad when they're low. When they're low, you think about selling. When they're high, you think about buying. You'll see those tendencies, and observing those in yourself is one of the keys to being wealthy, because now you're observing your own behaviors, your own tendencies, so that you can control it better. Because that's part of investing, controlling your own self, rather than following the market. Because, if you look right here, this is akin to the herd of buffalo. When the lion jumps out, they all run. You have to actually stay. And you're going to stay by just being asleep and not taking any action. And so, that's kind of the keys to investing, being able to not act on your whims, but instead follow a consistent plan and say, this is the plan that I'm following. And having somebody to reinforce that this plan is okay. It's okay when it goes down. You didn't make bad decisions. Just let it ride and look long term about what happens. Just wanted to share that with you this morning to answer some questions that I've gotten. And you have a great day. Bye.